In today's weekly Forex forecast, we're talking about the DXY, the Euro, the Pound, the Dollar Yen, and also gold. So jumping right into it, guys, I don't want to waste any time here. Looking at the DXY, first of all, we do have a very, very choppy sideways market, very similar to what we had back here during price action like this. Even this down here, you can see it back here as well. Now, I'm not indicating that this is a top for the market because most of these patterns were topping patterns. However, you can also see back here, this also looks very similar to what we're seeing right now from the DXY. Let me move this over in case you guys can't see it. But this price action back here, in my opinion, is kind of very similar to what we're seeing here from the DXY. And you can see a similar pattern back here as well. So the jury is out, guys, on whether or not we're going to see a bottom here for the DXY over the coming days into next week. But really, the market has just become so indecisive that this is why I really haven't been trading too much. Just because you can see back here, this was our late 2023 low, right around 100.6 that we've talked about. And so far, the market did recover this level back here on this candle, which we'll talk about. However, so far, it really is just kind of chopping back and forth around this area. So what you'll notice here, and typically, guys, when you see a market do this right here, when you see a market close a day below, like this day right here, and then close back above, typically that is a bottoming pattern. But this is how indecisive these markets have been, to where really we just got on Thursday and even Friday, follow through to the downside once again. Now, the one thing that kept me out of long in the US dollar was the fact that the market was below this area around 101 that we talked about last weekend. So notice all of these highs and closing prices through here. This is what has kept me out of turning bullish on the US dollar. In my opinion, this is what the US dollar has to break back above in order to turn bullish back there toward those 102 range highs. Now, is the market going to target that 99.6 area that we've talked about? Again, that is the 2023 low. And there's also some symmetry down here based on this descending channel we've discussed here on this channel as well. So these highs up here, if you take a parallel level off of these highs, drag it down there to the 2023 low, you can see where we do get an intersection with that 2023 low, or I'm sorry, the late 2023 low back here. This was the 2023 low. And you can see where we do get an intersection down here in this area. But the jury is still out on whether we get a move down there or not. And that's especially true, guys, given how messy this price action has become here over the past few days. So I'm hesitant right now to call this a breakdown simply because, again, we got a breakdown on this candle only for the market to close back above. So what I'm kind of considering right now for the DXY, and again, guys, to turn bullish here, in my opinion, the market's going to have to close back above 101. That's what it's going to take, this higher high back here to target those 102 highs. Now, if we look at something like the 8-hour time frame, or any intraday time frame really will do, but if you'll notice here, we do have the potential for some type of falling wedge that has developed. Okay, so off of this high up here, all right, you can see that we do have this descending trend line off these highs. And if we take a level off of these lows back here, you can see where we do have a lower level as well. Okay, so this right here could be hinting at a potential bottom for the DXY. But again, two things have to happen. First of all, we need to see the DXY breaking above this level here, this trend line, and then also clearing out this area around 101. Notice all these highs through here. Now, alternatively, if next week we see the market break below this level here and hold below, then we're probably going to move down here toward 99.4 to 99.6. All right, guys, so just be really careful with the DXY right now. Really across the Forex market, or most of the Forex market, it has been very indecisive, because if the DXY is doing this, you can pretty much bet that every major currency pair, or just about every major currency pair, is doing something similar. All right, so next up, let's take a look here at the EURUSD, which is essentially the inverse of the DXY. So no surprise to see the market really just doing the same thing here, chopping back and forth every single day. So again, this is the kind of price action I like to avoid, even though you could range trade this, and that's worked out relatively well over the past few weeks. That's not my style of trading. I tend to like to look for fake outs. Like this back here was a perfect example where we had to move above the top of this channel here. And you can see where we got the close back below. And we talked about this here on this channel as well, where we got the retest up here on this NFP candle and the move down here toward that first target around 110. So that was a setup that we discussed here, and I did like that setup, and it also played out relatively well. But since that time, there really hasn't been much to do here. Now, as for whether or not the euro is going to target this low down here and potentially the bottom of this channel, comes down to 111.10. very similar to that 101 level on the DXY. So you can see that back here for the euro, if we move in here on the daily time frame, okay, this level back here has been a pivot for the euro. You can see support back here off of this closing price, resistance through here, and support since that time. So this is going to have to give out on the daily chart in order to open up that area around 110. Okay, so until the market, while the market's above this level, I should say, then there is no short setup here in my opinion, okay? Because if you're shorting up here, you're basically just getting stopped out every single time because the market just continues to churn higher right below the top of this channel, okay? So I don't, favor trading the euro right now until we get a move below 111.10 to target 110. Or, alternatively, of course, if the market just continues to do this and the DXY goes down there to test that 99.6 area, then we could see the euro come up here and test this region back here, which is that 2023 high. All right, so the jury's still out, guys, on all of this. I mean, right now, just a really messy market and the kind of stuff that I just really like to avoid until we get something more favorable. All right, so next up, let's talk about the pound here, which has been a lot stronger than the euro and has been moving higher up there toward that 134 to 135 resistance area. Now, the thing with the pound, though, and this trend line has come into play here recently, but you can see that off of these highs from back here in May, okay, so all these highs back here, you can see we've got this high through here, this one, and now recently the retest here as new resistance. Now, the jury is out, guys, on whether or not this triggers a topping pattern or at least a local top for the pound. But I think that you've got to be really careful trying to short this market, though, while the DXY is just going sideways. Now, I haven't looked at this yet, and I don't know if there's going to be anything here favorable for us to trade. But if you look at the 4-hour time frame, all right, the bottom line here is that this area back here, so right around 132.50, this is going to be key support if we do get a pullback. Now, looking here at the 4-hour, okay, I can see that we do have some lows in this area to where we could use this as a potential breakdown next week. So again, this trend line up here is that trend line from May. And if we look toward the lows here, I'm going to see if this lines up either on the low or the closing price back here. And either one technically is valid, guys. You can draw this from the low or the closing price. But, bottom line here is this level right here. I think if we were to see a breakdown below this next week, then that could give us that move for that push down here toward 132.50 to fill in this area down here. And again, this trend line from May, guys, has triggered multiple pullbacks from the pound. So it is going to be one to watch. The fact that the market is coming off of that level once again. But really, I think that this trend line here is going to be the one to watch for next week. If we do get a breakdown, 132.50 comes into play, potentially 131.40. But really at that point, you're looking at the DXY above 101, targeting that 102 area. All right. So that's what I'm seeing right now for the pound, guys. I obviously don't like longing this market while it's below this resistance back here, off of those May highs. And at the same time, I don't like shorting the market without a confirmed breakdown. All right, so next up we have the dollar yen, which obviously is a very volatile market these days. And what I mentioned earlier in the week, last week, is the potential for the move up here toward 146 to 146.50. Now, you might be looking at this candle today and saying, well, that didn't work out, right? But it actually did, because this was the candle, this was the trigger candle right here on Wednesday that we got the close back above 144. So notice these closing prices back here, right? So we got the close back above and the retest here on the very next candle. So that Thursday candle retested exactly in this area. And this move right here happened before the push lower, okay? So technically, if you were buying through here on that break above and targeting this area up here, this is the same box that I had on my chart the other day, then you can see we did get a move right up there toward that area. Now, the reason the market targeted this, and I talk about this a lot on this channel, is candles like this back here. This was an inefficiency for the dollar yen. Notice how on this red candle right here, okay, this red candle, the very next one opened and we got no retrace into this candle, okay? So as soon as we got the close above 144, this was the trigger right here on the close back above, and this was the target, also what I like to refer to as a magnet because of this inefficiency. Inefficiencies like this represent open liquidity, and markets seek liquidity. So that's what we saw here on Friday, but of course we got the big move lower and the market back below 144. All right, so that was just a little bit of an educational piece there on what happened here. Now let's talk about where this market could be going in the week ahead. So the first thing, guys, is that we have a very large candle here on Friday. And a lot of times what happens in the following week is you do get some type of retrace into this candle body. So, obviously, as long as this is the case and we don't have that retrace and the market is above levels like this down here, above, 140, 180, I don't favor trying to short this market. I never like trying to short a market low. So this level up here, 144, is going to flip back to resistance for next week. Now, support down here at 140, 180. This right here could trigger a move back there toward 144. But again, that's going to be resistance now with this Friday candle. Okay, so what I'm expecting going forward for the dollar yen, at least early next week, would be to see, potentially some ranging price action between these two areas. Okay, so that's kind of what I'm looking for. Maybe, Monday, Tuesday, maybe Wednesday, possibly a rotation lower from this and then a breakdown below this area here to target some of these lows. Okay, but ultimately, guys, with this candle, it becomes a little less obvious. I think the obvious play here, in my opinion, was that Wednesday close back above 144 to target this area up here, which we got. Now, guys, it gets a little bit trickier to read. However, again, I do think with this candle and closing back below 144, I do like the idea of some ranging price action between these two levels early next week. And last up, let's talk about gold here, XAUUSD, which you guys know that this breakout back here, we talked about this a lot, but this breakout right here above 25.27. Okay, so this breakout through here, resistance, we had the breakout candle. This was the target following that breakout. Of course, it was tricky to play though, because this breakout candle was rather large and we didn't get a full retrace into this area before the move higher. But ultimately, this up here was the resistance I was watching. You can see we did get a little bit of a rejection from that area. But of course, gold took out the top of this channel. So going forward, guys, as long as the market is above this area through here, and I'm going to take this off for a second, just to kind of clean this up a little bit. But basically, as long as the market is holding above this area here next week, then I don't favor looking for shorts here. I think if you're trying to short this market right now, given what we've seen here over the past few weeks and months, really, I think that that's ill-advised. All right. At the same time, though, in my experience, upward breaks of ascending channels like this or ascending levels like this do tend to fail more often than not. So that's something to pay attention to as well. We did get an upside break of a clearly ascending level, okay? So something to watch for next week. But again, this area down here, right around 26.20 or so, this is going to be key support for gold. Obviously, if we get a bounce from there, the market is back in, blue sky territory, right? And then the market's never been this high, so it's very difficult to come up with targets. However, what you can see here is that for the most part, the market is finding resistance right around some of these big round numbers like 2,600. Okay, back here, you can see that this was essentially this high right here. And so far, 2,700 was very close to that high on Thursday. So you start to look for big round numbers, 2,750, 2,800, things like that, if we get the bounce from here. Now, alternatively, if we get the market closing back below this area here, okay, back below this channel top here. Okay, so notice these highs right back in here, right? So if the market were to close back below this over the coming days, then that could represent a at least near-term top for a move back down there toward levels like 25, 27. All right, so that's what I'm looking for here. Again, this area down here is going to be key support for gold. As long as that's intact, we do have a breakout here from gold. But if it were to close below this, get a sustained break below this, then we could see the market target areas like this down here around 25, 27. And bounce from this area down here. And like I said, we are probably looking at a target of those big round numbers like 2,750 and 2,800. Be sure to subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. Claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that Join VIP link. Have a great weekend, and I will talk to you again on Monday.